Good morning, dear student. I am Shafiur Rahman, Assistant Professor, Department of Economics, USTM. So today we are going to discuss about a new topic of the macroeconomics. Actually, it is the initial topic here. Just I'm going to discuss about what sector generally that what is the circular flow of income. So here, uh, these are the beginning portion of the macroeconomics, because macroeconomics by definition you've got to know that it is that branch of economics which studies economics as a whole. So while we talk about economy as a whole, of course we have to talk about uh, you know the larger picture where the income flows from one sector to the another sector. So without wasting time, let's begin uh, about the circular flow of income. So here, the very beginning, here you can see the introduction part that initially we discussed about what is the macroeconomics. So it is said the macroeconomics that branch of economics which studies economic behavior of all agents in the economy. That is the study of the economy as a whole. In other words, macroeconomics is the study of aggregate outcome of the decision taken by the different agents in an economy. To begin with the study of basic macroeconomic, let us introduce the concept of the circular flow of income. Actually, while we discuss about the different, aspects, the broader concept of the economy, we must know how the income flows from one sector to the another sector of the economy. So here in the circular flow, there are two types of flow. Actually, we can say that circular flow is of two types. One is the money flow, another is the real flow. Actually, money flow means when money flows from one sector of the economy to the another sector. And real flow is the flow of goods and services. Because as we know, money is not the end, money is the mean. And the goods and services that we are striving for is the end. Or in a simple language, we can say that we earn money not to eat money, but we earn money to buy the food that we're supposed to eat, or buy the clothes, or for the clothes that we're supposed to wear. So that is why money is the main, but end is the goods and services, and that is why when the goods and services flow from one sector to the other sector, then it is called real flow. I'm going to the next slide here. The four macroeconomic sectors. Actually, in macroeconomics, there are four sectors. Within these four sectors, all the economy used to uh, move. All the economic activity happens. Number one is the household sector. Every household is considered as the household sector. Then farm sector. Actually, farm sector is the sector where all the productions are generally made. All the production happens in the farm sector. Uh, that you can see the farm sector. This sector includes all the business entities. Hmm. All the business entities, corporations, uh, partnership, the primary function of the sector, goods and services, and everything that comes under the farm. And next, the third sector of the circular flow is the government sector. Actually, government sector is important because the state must have its authority. Uh, so, in the government sector, uh, it this sector includes the center, state, local governments, The prime functions of this sector is to regulate the function of the economy. The government sector incurs both revenue as well as expenditure. Means government sector earns. There is an income of the government as well as there is expenditure of the government. The government earns revenue from tax and non-tax sources and incurs expenditure for provide essential public service to the people. Next is the foreign sector. So nowadays all the economics are open economy. You hardly find an economy is closed. Means hardly you will find an economy which doesn't have a connection with other. So in the modern era, in the modern geo-economic conditions, every economy has the connectivity with other economy, whether in terms of export, import, foreign aid, all these. So there is a flow of income from the foreign country to the domestic country or from the domestic country to the foreign country. So these four basic sectors, the household sector, farm sector, government sector, foreign sector. Next is free market. So now in macroeconomic concept, there are three markets also. First is the good market, the goods market. When goods actually goods and service markets, common you can say, when goods and services are available. The market in this market, goods and services accessed among the four macroeconomic sectors. The consumers were the household, government, and the foreign sectors, while the producers are the farmers. Next is the factor market. It is a good market, then factor. Actually, in the factor markets where all the factors of productions are, used to buy to use the production. The factors of productions are traded through this market for the production of final goods and services. The firms obtain the factor services and make payments in the form of rent, wage, profit for the service of the household sector. Of course, the factors of production that we got in microeconomics, that land, labor, capital, organization. So land, the return received by the land is the rent. Labor gets the wage or salary. The capital gets the interest. The entrepreneur gets the profit. So all the factors of productions that. Next is the financial market. This is another thing. This market consists of financial institutions such as banks, non-banking intermediaries who engage in borrowing. Even in the financial market, other two sectors they can save as well as they borrow. Whenever they have excess income, they can save it, and when they're in short of money, they can borrow it. Next is the circular flow of income in a two-sector model. In two-sector model, how the income flows from one sector to the another sector. Actually, in this model, the economy is assumed to be a closed economy generally, but which practically you will never find because no economy is closed economy now. But suppose we assume the economy that transacted within the economy, it doesn't have any connection with the outside of the country. So that is the economy is assumed to be a closed economy and consists of two sectors, the household and the farm. The closed economy is all economy. The closed economy is an economy that doesn't participate in the international trade. In this model, the household sector is the only buyer of the goods and services produced by the farms, and it also the only supplier of the factors of production. The household sector spends the entire income on the purchase of goods and services produced by the farms, implying that there is no savings or investment in the economy. The farms are the only producer of the goods and services. The farms generate income by selling the goods and services to the household sector and later earns the income by selling the factors of production to the farmer. Thus, the income of the producer is equal to the income of the household is equal to the consumption expenditure of household. The demand of the economy is equal to the supply, and that is why y equal to c. That you can see here in your screen that y equal to c means income equal to consumption. So here you can see we have a diagram that I have a flow chart here in C, that land, labor, capital, and enterprise. So from the household, you can see, you see the arrow mark. From the household, the land, labor, capital, enterprise moves to the farm. Okay. Now, land, labor, capital, enterprise, because the land owner stays in the household, labor owner stays in the household, capital owner also stays in the household, the enterprise or the entrepreneur also stays in the household. So all these are the household. Uh, all this comes from the household, and all they come to the farm and meet together in the farm and start producing. And that is why the goods, uh, as the factors of production moves from household to the farm, in return, all these factors of production get some compensation. That factor income. What is factor income? The land will get the rent, the labor will get the wage or salary, the capital will get the interest, and enterprise will get the profit. You see the arrow mark from farm to the household. Now this is the flow. Now another flow you can see, there is a flow of goods and services. Actually consumable goods and services from farm to the household. You see the arrow. Because all the consumable goods and services are produced in the farm. When it is produced, ultimately it moves from farm to the household, because the consumers remains in the household. They used to go to the farm and buy the goods, and that is why it moves from, you can see the mark, from farm to the household. And in return, the consumption expenditure moves from household to farm, because whenever you have to buy the goods, when you are going to buy the goods, then of course you have to pay the money. While you buy the goods from the farm, you have to pay the money, and that money moves from household to the farm. So this is the two-sector model of circular flow, and it happens in case of closed economy, but there are two, sectors, that is farms and household. Now, another one, the circular flow of income, two-sector model with saving and investment. So far we come to know that there are two sectors, one is household, one is farm. Factors of production moves from household to farm in the form of land, labor, capital, organization. Again, the factor payment moves from farms to the household in the form of rent, wage, interest, profit. In the similar way, the consumable goods farm moves from farm to the household, and in return, the consumption expenditure moves from uh, household to farm. So here you can see very simple thing, that factor services that moves from household to farm. In return, the factor payment comes from this side to this side. Again, you see the consumable goods move from uh, uh, farm to the household. In return, the payment for the consumable goods goes to like this. Okay, this so we learned in our earlier model of two sector in case of closed economy. Okay, and now the two sector model with uh, two sector model with two sector model with the capital market. Here you see capital market or the financial system. Actually, when all the factors of production moves from household to farm. You can see in the arrow. When it moves from household to farm, it you know gets income in the form of payment for factor services, wage, rent, interest, profit. The question is that whatever the factor services earned from the farm, say uh, the household, sorry, the labor earns 10,000 of rupees, but he did not to spend the entire 10,000 for buying goods and services from other firms. So suppose he need 8,000 to meet his all expenses, but he earns 10,000 by working in the farm, and he needs 8,000 by meeting all the expenses. So 2,000 remains with him. That 2,000 he can save to the capital market. This is. Or if I'm just bringing that example of the labor, or the labor earns 10,000 in working farms, but he needs 12,000 to meet all his expenses. So rest 2,000 where he will get, because he could only able to earn 10,000. This rest 2,000 he will borrow from the capital market. So when the household has excess income, they can save it to the capital market, or when the household is in need of money, it can borrow from capital market. Similar things happen in case of farms. When the farms earn excess income by selling its consumable goods, it can save money with the capital market. Or sometimes the farms might be in urgent need of money for investment or whatever it earns by selling its goods and services, that was not enough, so it needs more money than it can borrow from financial markets. So this is about two sector model, which saving and investment. So now we are moving to the another one, that is the circular flow in three sector model. So far we got to know about the two sector model, simple two sector model. Again, two sector model with saving, borrowing and saving, actually with the financial system, with the financial market, that will come to know. Now here comes the three sector model. Actually in three sector model, the third number sector is the government. Here you will find the household, you will find the farm, household farm, and the third number sector is the government. So the three sector model of circular flow income highlights the role played by the government sector. This is a more realistic model with which includes the economic activities of the government. However, we continue to assume the economy to be closed one. Again, it is a closed economy. We assumed it is a closed economy. It doesn't have any transaction with the foreign countries. Okay, so there are no transactions with the rest of the world. The government levies taxes on the household and the farms, and it also gives subsidies to the farms and transfer payments to the household sector. Thus, there is income flow from the household and farms to the government by taxes in one direction, and there is income flow of the government to household farms in other direction. If the government revenue falls short of its expenditure, it also borrow through financial market. Okay, this sector adds three key elements to the circular flow model: taxes, government purchases, and government borrowings. So now let's come to the diagrammatic presentation here. Just it will be very easy. Now you see here, uh, three sector model. The household is one sector, farm is another sector. The third number sector is the government sector. And in between there is a financial market. Now just let me discuss about here with the household and government, how the circular flow happens. You see, uh, the factor payments that household gets from the government. Actually, as we know, in our it is a common phenomena for all that uh, when we are in a government job. So if somebody is in government job, he is providing his service. Because of the service, he is getting some compensation in the form of salary. So income received from for providing service, and that is you can show the arrow here. You can see factor payments. Okay, another one is the transfer payment. So it is a new concept. What is called transfer payment? Transfer payment means transfer payment or transfer earning. Transfer earning is that earning which a person gets without performing any work. Without performing any work, whatever is earned, that is called transfer earning. But transfer payment is also that without receiving any service. If you pay, then it will be transfer payment. So transfer payment, especially from government to household, what we can say is that our old age pension is a kind of transfer earning. You know, but don't put the uh, retirement, you know, pension, because retirement pension is not transfer earning. How come it be? Because if somebody works for 30, 35 years on a particular department, means he or she has given his entire productive life to that particular department. After retirement, of course, that department or the government must take care of him. So it is not the transfer payment, but the oldest pension that is given by the government, or unemployment allowances that is given by the government. In some states, the state government, as I'm from Assam, in Assam, the government of Assam provided Urunodaya scheme for the elderly people, to providing thousands of rupees to the every month to the old person. So these are the transfer earning that moves from government to household. And next is the tax payment that moves from household to government. Actually, here we can write it is a direct tax, because when government imposes tax to the household must pay to the government. Direct tax they have to give to the government. So it is a flow of income from household to government. Now see the circular flow from farms to the government. Payment for goods and services. Now you see, government used to buy many things from the farm. Government needs car, government needs computer, government needs farm, government needs other stationaries. All these things government used to buy from farm. So for that, the government has to make payment to the farm. This is one flow from the hand of the government to the hand of the farm. Next is subsidy. Now, when government used to give subsidy, the amount of subsidy uh, directly goes to the uh, farm. Uh, so it is a subsidy means increase in income of the farm. It is a kind of income, because in the language of economics, a penny saved is a penny earned. So of course, that is why subsidy as you are saving. So it is a part of the income. Next is rest, household and farm. There too, there is a movement of factors of production from household to farm. In turn, there is a movement of factor payments. Again, there is a movement of consumable goods from farm to household. In return, there is a movement of consumption expenditure from household to farm. Let's move to the next slide. So here it is all about given. Okay. Y income equals C plus I plus Z. Consumption, private consumption expenditure, investment expenditure, government expenditure. Now, fourth sector model. In the fourth sector model, the fourth number sector is the government. The fourth. Now you see, in two sector model there was household and farm. In three sector model there is household, farm, and foreign sector. So sorry, and government sector. And in fourth sector model, household, farm, government, and foreign sector. So all the circular flow of income from household to government, or government to household, farm to government, or government to farm, or farm to household, household to farm, that we studied. Now we have to know the foreign sectors, how income flows from foreign sector to all our other sectors. Now you see, there is a flow of income from household to the foreign sector. Actually, if someone from the household went out from the country to the other country and he works there and he sends some remittances, return earnings to his family, then it is a factor income earned from abroad. Suppose you after your completion of your post graduation or graduation, uh, you went to USA for job and you got job there. Whatever you are earning, you earn and you make expenditure. And some portion of saving money you send to your parents who are here in India. So you are a factors of production where you are working there in USA. So whatever you are earning and sending it to your home, that will be factor income earned from abroad. And another one is that international transfer earning. And it happens, especially in the developing countries. A lot of international transfer earnings are coming. A lot of philanthropies, even international organization, they used to provide, uh, you know, many aids, foreign aids, which are considered as international transfer earning. Now, the movement of income, so the circular flow between foreign sector and the farm. Actually, when the farm import some capital goods, especially in our country, we cannot produce much capital goods. Capital goods means machineries. So all the machineries generally produced by the developed countries, and among them, ABS is the pioneer. So suppose if the farm imports a machine from USA, of course you have to make payment for the import. And on the contrary, if the farm used to produce some commodity and export it, for the export, you will receive the it will get the it will receive the payment from the foreign country. So this is how the circular flow happens between the countries. So this is how that I have shown in the diagram. So now two more things remains in the you know two more things remains. The last two things of the circular flow. One is leakages and injection. Actually, leakages is nothing but when a particular sector, whatever it earns, if it saves a portion, uh, I'm going back to the earlier slide. You can see, you can see here. So you can see here, if the household people, if the labor earns 10,000 rupees by working in the farm, and he brings this 10,000 at household, and now he is not spending the entire 10,000, he's spending 8,000, and he saves 2,000 with the capital market. This is called leakage, because actually the proper circular flow will happen only when whatever he earns, say he earned 10,000, he has to spend the entire 10,000. Then only it will make a movement, it will make a circle. But instead of spending 10,000, he's spending 8,000 and he saves, uh, 2,000. That is the leakage from the circular flow. And another concept is the injection. Injection means if the labor earns 10,000 from the farm and the 10,000 is not enough for his monthly expenses, rather he borrowed another 2,000 from this capital market. So he earns 10,000 and also borrows 2,000. 10 plus to 12,000. Now he is spending 12,000. Means he is giving 12,000 in the circulation. Means giving 2,000 more in the circulation. Means he is injecting 2,000 in the circulation. That is why it is called injection in the circular flow. So this is about the circular flow, injections, and leakage. So with this, I'm just concluding the circular flow of income. Just concluding the circular flow of income for the today.